So we're back here on the Duncan Duo Real Estate Show talking with Richard Vasquez from Artisan Insurance and Robert Johnson, the lead listing agent for my real estate team, talking about the market. And you know, I prefaced it before the break, you know, kind of the slowdown in the market. I think a lot of people, and we're seeing this now, people that are contacting us to sell their homes are kind of beating their chest and very confident about their ability to sell their home because they're paying attention to news releases from 6 months and a year ago. The market has slowed, and I think it's going to continue to slow. We had an artificial thing happen last year that made our market look so healthy, that made a lot of people get an overconfidence, almost a cockiness about the ability to sell their home, and that's about to change. And it's about to change because, you know, the hedge funds are gone, interest rates are rising, consumers are buyers are more fearful of a lot of different things causing them not to purchase. And we've seen a lot less real estate transactions in the market. The market, according to the latest real estate statistics from our board of realtors, down about 12% in terms of the number of transactions from last year to this year. And so what's happened is when the market starts to soften, you know, prices start to not rise, and not as many transactions means not as many people that can sell. And I mean, it's just a whole, you know, domino effect of events that happen, and I think we're in that market now where we're going to start to see some of that softening and stabilizing this year that people weren't really expecting, and I was, and mostly because I knew the hedge funds were such a huge part of our market last year, and because they were the domino effect. They'd buy the $200,000 house so that somebody could go out and move up and buy the 300, so that guy could move up and buy the 400. When you take away the initial piece of that, there's 4 or 5 transactions, including up to $1 million luxury property, that don't happen because those sales don't actually happen. And that's what we're seeing this year. We're seeing, you know, sales dramatically off from last year's pace, not as many homes selling, and I think there's certainly a concern that you know, home sellers have to have in that maybe they missed it, you know, and you know, so they're coming to us and saying, hey, we want to sell because 6 months ago something sold, and we have to factor in data that doesn't just look backwards but looks forward, you know, and if we see, hey, look, you can have a ton of homes in your neighborhood, even if you can get last year's number, you know, the issue isn't just getting number, it's getting it sold. I mean, the saturation rates are starting to, you know, we're starting to see more we're starting to see more homes on the market in some neighborhoods, and there's definitely a concern. Is it better than it was in a bust? No doubt. But are we going to have as good of a real estate year this year as we had last year? We're not. I mean, I'll tell you that right now. We can see all the statistics, and I think home sellers have to be concerned, and home buyers need to say, hey, take an opportunity to take advantage of it. Let's go find the bargains in the marketplace. So I think, Robert, you're kind of seeing the same thing. It's softened, and you know, people aren't paying attention to that.
Yeah, and I don't think it's something that's going to happen. I think it's already happening. Yeah, and I think you know, when you're honest with sellers up front, especially right now about the price, some sellers are getting upset with, you know, sometimes with you, thinking that you're not being, you know, forthcoming about the price with them, but really it's that, you know, we want to give them exactly what to expect from their sale, and the market has slowed down.
And our experience is coming into play with we know how to predict some of those things because we've been there before. We've seen it. We know how to look at the statistics related to how many homes are on the market versus how many are selling, and help be an indicator for the price. So most people just look 6 months back and say, hey, what's sold? Okay, that's what my home is worth. Well, no, that's what your home was worth 6 months ago. I mean, your home is worth now what's going to sell right now, and if the saturation rates and the supply and demand curve aren't in your favor, then ultimately you've got some obstacles. And I'm not saying, you know, this is, you know, we're not doing the gloom and doom here saying our market's going to crash. I mean, by no means am I saying that. I'm saying a softening, a stabilizing. We're not going to see the huge surges that we saw last year. And again, I'm talking about the Tampa Bay market as a general whole. In some neighborhoods, is it going to do better? Absolutely, but that's why real estate's so local. People get so confused by that. There'll be a news release on TV that'll say the market's down, but then they find out their neighborhood's up, or they'll see the market's up, or whatever it is, and their neighborhood may be the complete opposite of that. So real estate is really, really local. We're speaking in generalities here, but if you're in a hot neighborhood, it may not be that. It may be something completely opposite going on. You know, but ultimately, the market as a whole, the statistics that have been released each month this year trail the statistics from last year. So last year we saw, you know, prices that, you know, that have improved, but we're seeing a lot less number of homes selling. So, and I think, again, that is something that you have to keep in mind. If no matter what your home can appraise for, there has to be a buyer for it. You know, and it doesn't matter if you can pay an appraiser and get an appraisal at a great number. It matters what will a person put pen to paper and buy your home for. And that's the number that matters. It doesn't matter what, you know, quite frankly, it doesn't matter what Zillow says. It doesn't matter what, you know, any of these auto evaluations. And really, it doesn't matter what an appraiser says. It matters what will a buyer pay for it. And if you don't have a buyer for it, it doesn't matter. So I think it's really crucial that we have to pay attention to that this year is going to be a year where things soften, and the stuff sellers were able to do a year ago, you know, they're not going to be able to do now, and they have to be more, you know, concerned when they put their home on the market and realistic that, you know, the surge we saw a year ago, if that's kind of in your mind what you think is going to happen, you might have missed it. You know, you might have missed it. And
yeah, and I think it's even more important now to look at the inventory that's on the market, like I was talking about the sellers yesterday. But in any neighborhood, I think it's important not to just look at what's sold, but the inventory that's on the market. And, you know, maybe if you saw a sale that was $250 last year and you're thinking you're going to get, you know, top dollar $250 this year, and then everything else is listed at $250. I mean, you might have to come on the market a little below that to try to get somebody to buy it.
Right, because, you know, the example is, you know, just because something sold for $250 last year, if there's 14 comparables on the market and none have sold in 3 months, that doesn't mean you're going to get $250 this year. And that's why real estate agents have a career. That's why we do what we do. I mean, people will look at it and think that they can, you know, they stayed at a Holiday Inn so they can play realtor, and they can figure out what a home should sell for because they looked at a website and saw what a neighbor's home sold for a year ago. It matters. There's a lot of data that goes into our job and our evaluation of what your home can sell for. It's not just what has sold. It's what's under contract, what's on the market, how many homes on the market, how much is the absorption rate, how long have those homes been on the market, you know, what's going on in the finance market, how many homes are selling compared to what, you know, that were selling a year ago. Is there a great big corporate institutional investor buying up 400 and 500 homes a month that helps your home sell or helps your value go? And that isn't the case this year. There isn't that. So many homes sold for great prices last year because buyers had that pressure or fear of losing out to the hedge fund, and the hedge funds helped our values rise because they were buying so much inventory. They are gone. They're not buying those numbers of homes anymore. So, you know, with that, you know, being gone, so many people got motivated. Oh, now it's time to put the home on the market. You know, that too many of them thought that they could get those kinds of numbers, but they missed it. You know, and it's unfortunate, but real estate is cyclical. And it still does matter what's going on in your neighborhood. We are talking a lot in generalities on the show about the Tampa real estate market. But realistically, the real estate market that matters most is the one for your neighborhood. So if you're curious about what's going on in your neighborhood, you're curious about your home's value, you want to know how many homes are selling, go to TampaGuaranteedSale.com. Again, it's Tampa Guaranteed with a D, TampaGuaranteedSale.com. There's a little bar at the top of that page where you can type in your address and you can get a little home evaluation report. It'll show you kind of some estimates of value for your property. Then you'll get a market snapshot from us that shows you a monthly report about all the homes in your neighborhood that are on the market, all the homes in the neighborhood that are under contract, that have sold, and you'll get that report, you know, every month, so you get a feel for what's going on in your neighborhood. Because again, it varies from neighborhood to neighborhood, and that's why it's important for you as a consumer, if you own a home, to get this kind of report. So again, it's TampaGuaranteedSale.com, and you'll get a free monthly, you know, home report with all the statistics that matter to you and your home. Because again, you know, East Lake Woodlands might be outperforming West Chase, might be outperforming North Tampa, South Tampa might be outperforming those. You know, you could have Carrollwood you know, it really does depend on where you live. You know, you could be on the beach, and like we've talked about with flood insurance, the last 6 months, maybe not much has moved, but that could mean an opportunity that now they're going to start moving because the flood insurance thing is fixed. So it really does require a professional to talk to you about it to help you strategize. And I think our approach is helping you get, you know, the most money for your home to get it sold in the quickest time frame, and our stats and all of our endorsements and all that support that. But I think the important part of that is that we view ourselves in a you know, more of a consultant you know, concept, in that if we look at it and say, hey, you should wait, or you should, you know, you're not ready, or you should get it on the market, or, you know, we're going to give you the right advice for your situation. You know, there are people, you know, that call us sometimes during the holidays, and in certain price ranges and neighborhoods the market's slower. We might say, hey, wait a few months. We don't just want to list your home. We want to position you, you know, to sell and get the most money you possibly can.